expectations. What's your perspective on where the markets are at the moment as we get into a new month?
Basically, the markets are still flat. April is a better year. The market went up by close to 3.5, 3.2% there. But if you look at even how the market just chopped to that 3.5%, it's generally flat. Volumes are not that much. If you look at also turnover and volumes date on date in April, they were actually coming down, maybe apart from the last day, the 29th of April, when there was a bit of activity. So currently the market is in a position where it's a bit stagnant, just trading sideways.
Well, of course, we've got a threat being posed by rising inflation, and that's really on the investors' radar screen at this stage. The rate swinging to double digits in April, touching just over 12% and rising for a sixth straight month in a row. How's inflation coming to bear on market activity from a local perspective?
Okay, basically, I think economic pessimism is what now ends up playing into the market. The central bank has very few options into taming inflation, and one of those options is to raise interest rates. And as interest rates start going up, basically what you are saying is that you are trying to trim economic growth. So that you can fight inflation. Mm-hmm. So with the trimmed economic outlook, it trickles down again to how the companies will perform, the dividend payouts and everything. So investors are a bit factoring that in, and you find most of them will be playing rather in cash right now until they see the movement in the market or the movement in the interest rates.
That from a local investor perspective. When it comes to foreign investor activity, though, it's really what's been keeping the markets buoyant or just, up in positive territory over the recent past. Let's take a look at where that attention is being diverted specifically. Is it still on the more liquid big cap stocks?
Yeah, if you even look today at the biggest movers in terms of volume and even turnover, the top 5 gainers basically have a huge foreign presence on them, the highest being KCB. Which was the highest mover today, and most of the trades, 60 to 70%, were basically by foreigners. For most foreigners right now, they're seeing a bargain on the share prices, and for them, they don't share in Kenya's inflation because they're not going to spend the money in Kenya. So you find their purchasing power is protected from back home. So they come in, get the capital gains, repatriate the funds. For a Kenyan, on the other hand, you buy in, you make your capital gains, but you have to factor in the 12% inflation inside.
Absolutely. You touched on KCB there for a moment. Of course, we've also seen Equity Bank getting significant interest this post results, where Equity Bank specifically posted a 73% surge in Q1 pre-tax profit, and that really beating market expectations. To what extent are the numbers like these that are filtering through still keeping investors' expectations elevated around the banking sector? Because not so long ago had we heard that we might well see some tapering back off banking share prices on the back of the fact that we may not see as strong growth moving forward.
If you look at the banking results, okay, most of them actually basically do the standard. They give you a quarter-on-quarter analysis, give you a quarter 2010 and a quarter 2011, which sometimes is not really truly telling the story. What investors will need to look at is their quarter 4 2010 and their quarter 1 2011, and try and see the momentum quarter on quarter. Because on quarter to quarter basis, yes, the rates will be the growth rates will be phenomenal, considering most of them had taken a battering previously. So if someone is going to come into the Nairobi Stock Exchange, yes, the financials are good, but there are stocks like the agricultural sector, the construction sector, which are now down 20-30% on a year-to-date basis.
Of course, you've touched on some of the opportunities there. Let's take a look at some of those within the manufacturing space specifically, because also inflationary pressures would come to bear on company profits on that end as they experience the rising costs like that of fuel and electricity moving forward. What's your approach towards that sector of the economy?
I guess the issue is to watch how they manage it. Are they going to pass the cost to the consumer to try and make the margin, or are they going to take the cost themselves from their own reserves and keep on demand for the products? It's a really tricky issue for the manufacturing sector right now. But I guess for those guys who manufacture basic commodities, you know, like Mias for the sugar, Unga Group for the flour and stuff like that, really demand will not go down even if the price goes up, because they are basic necessities. You might see some reduction in the construction sector from the guys who produce cement and paint, and as people try to look for alternatives or reduce basically their construction.
So a very selective approach towards that sector of the market. KQ, in the meantime, out with Q1 numbers today and reflecting business activity. The airline recording a 13.5% rise in passenger volumes. So on the face of it, its strategy into Africa, expanding its routes and increasing flight frequencies really seems to be paying off here.
Yeah, true. That strategy of theirs at least looks like it's actually paying off. There are more, as Africa develops and African economies go up, you get an emerging middle class that likes to travel, that likes to go for holidays. It's just basically a new generation, and that works out well for them. However, most of KQ's customers are more on the business and corporate side than on the retail side. So if businesses and corporates start cutting travel expenditure to also contain their costs, then they might get hit on that angle. But currently the strategy is working well.
Of course, with that expansive strategy, natural to see the uptick in numbers. The key would be how the airline is managing costs at the same time. And we know that at least on that cost front, we've got fuel expenses being managed and the company benefiting from its hedging position, right?
Yes, for once the hedging position has actually gone in the right direction. But with interest rates forecasted to go up, if the Central Bank Monetary Policy Committee do raise their rates, then we expect the Kenya shilling to start strengthening, so to say. So I don't know how that will play out on their side. The weakening shilling plays out well for them. A strengthening shilling really doesn't pay that well for them.